Alright, gang, it's your boy Nature, aka Nature. Alright, then, so I told y'all I'm gonna give y'all all information, everything, how to trade for it. Got so alright, you already know what is the uptrend. So we gonna go over what is the downtrend for it. So just first thing first, I need to see what this looks like. So this is the downtrend. Just show y'all a lot of pictures of it. So you got the uptrend and downtrend. Downtrend is a higher lows and lower lows. You see higher lows, low highs. It's low highs and lower lows. That's that's a downtrend. So boom, you sell at the top, and if you were buying, you will buy at the bottom. So for this example, you selling at the top, at the high, boom. How we know it's going down? It's gonna make a low, and then it's gonna make a lower high, then it's gonna make a lower low. This lower low is lower than that low. Then it's gonna make another lower high. This lower high lower than that lower high. Boom, it's gonna make a low. So it's gonna make a high. Boom, it's gonna make a low high. It's gonna make a lower low. It's make another lower high. Boom, you know it's going down. Boom, low. That's a downtrend. Boom. That's what it looks like in a candle. Like downtrend right here in the candle. You can see you got at the top. You sell at the top. Boom. They go down low. Make two bearish candlesticks. You see big candlesticks like that. That means it's going down. You know. So then when it's a little choppy, boom. Then it made another big candlestick. Real big candlestick. Where it says you post it down. Boom. So it made a low. Boom. Made another lower low. Boom. So you know it's going down. Once it made that another lower low right here, where I made it after correction, and made that lower low, made that big candlestick, got in right there. You know what I'm saying? Boom. Boom. You know what I'm saying? For a good profit. For a very, very good profit. And it went down. Boom. Made another lower low. Another correction. Made another lower low. You just ride all the way down until you get a correction that's going back up. Boom. I just wanted to show y'all. You know, these is black and white. These is how I look at my candlesticks. Y'all candlesticks probably like green and red, but with my mentor taught me black and white. Like shout out to Swag Academy. But like the red would be for many people like the traders, the red would be black, and the white would be green. It's a downtrend, so the red will represent that's going down. But for like I like to use black and white. Black means it's going down. So alright, so it's gonna make lower lows and lower highs. You know, lower low, lower high, another lower low, another lower low, another lower high, lower low. So you're gonna get in at the top, at the high, and you're gonna ride it all the way down. Alright, so for a great profit. So boom, let's actually talk about it. So downtrend is a series of successively lower tops and lower bottoms, which is lower highs and lower lows, which create a downward pattern on the price chart. Though they are completely opposite, the downtrend is like the uptrend. If the pattern holds its remaining intact, the lines that connect two or more tops is called a downtrend line. So you want to sell it from high, from swing high to swing low. So how to identify a downtrend? Another way to think of a downtrend is that it is a sequence of lower highs and lower lows, moving from left to right on the chart. The impulsive waves each reach a lower price than the last impulsive, and the highs of each correction also move down. So that, you know what I mean? It's gonna make a low, gonna make a correction, and the correction gonna move back down though. It's gonna be moving down to a lower low. So like boom, let's go to the destination. Get that out the way. So what is a downtrend? The downtrend refers to the price action of the securities that move lower in price as it fluctuates people just like to trade on an uptrend. So I like to trade on both. Maximize all your money. Security in a downtrend seems to be more likely to continue trending lower until some market condition changes, implying that a downtrend marks fundamentally deteriorating conditions. So we trade it all the way down until we get some type of confirmation, with some type of like correction that it's going to move in a different. It's going to move once it change and move, and reversing the trend. We get moving different trend, an uptrend. So a downtrend can be contrast with an uptrend too, just like an uptrend. Just like the downtrend can be contrasted with an uptrend, just like an uptrend can be contrasted with a downtrend. So key takeaways for downtrends. Downtrends are characteristic by lower peaks and drought implied fundament in the belief of investors. So a chance is a drought is like that's what it's called. Another word for downtrend is called like a drought or lower peak, and it changes. And the change in trend is viewed by changes in supply of stocks, investors, or forex, and wants to sell compared with demand for stocks by investors who want to buy. So the sales compared with the demand for stocks by investors who want to buy. And also, coincidentally with chances and factor that surrounds the security, whether they got some big words, macroeconomic or specifically associated with a company business model. Alright, so how a downtrend works is a series of changes from an uptrend to a downtrend very rarely makes a single instantaneous change from one to the other. So it rarely makes that, you know what I'm saying? You're going to see it though. Instead, the price action is in an uptrend shows a sign of strain, some type of signs of like slowing down, and then the downtrend incrementally begins, follows after that. Both upwards and downtrends are marked by their peak and drought. So they're marked by their swing highs and swing lows, resistance and support, that's how you mark them on both uptrends and downtrends. And generally the direction they appear to be proceeding. The following instructions show a series of peaks and droughts. Peaks in even numbers and droughts are odd. So we don't see that. So beginning of the drought or the downtrend, boom, it started dropping, and it peaked up at number 2, then it dropped down at number 3, made a double bottom. This is considered a double bottom. Also is another that's a double pattern formation that's considered. If you study the notes, my only fan, we went over that already. Double stick, all the double candlestick patterns. So it's a double bottom, made a double bottom. Boom, went back up at its peak at 4, was made another high, made another lower low. Boom, and in the double bottom, we got the confirmation from the double bottom from 1 to 3. That line right there, that's a double bottom formation. And boom, so we got that is also that wants to go down. That's the and then boom. So it peaked back up at 4, number 5 went back down, made another lower low. So that's how you know. So dramatically shows the illustration is, and then number 7 right here went back down. It made another lower low. So it made a lower high, a lower low, another lower high, another lower low. So dramatically shows in the illustration is similar to nature to almost all trend changes from upward to downward. Those quickly varies in each instance. There are 3 characteristics of this change are common. So it's common, you won't see that. The price action falls below the most recent drought, shown in 1 to 3. Boom. The most recent drought right there. Boom. Then the next peak fell to rise higher than the preceding point. So it made another lower low, but it wasn't higher than that low. Yeah, that's how you know it's going down. It's going to make a lower low and then make another lower high, but that lower high, 4 not going to be higher than 2, and 6 not going to be higher than 4. So, but the, like, you know what I'm saying, a lower lows will. So you see how 3 lower lows high is lower, low is higher than 3, is lower than 3, and 7 is lower than 5. So that's how you know. It says the next peak failed to rise higher than the preceding point 3 to 5. It's going to do that. It's not going to rise higher because it's going down. It's making lower lows, but it's going to make a lower high and a lower low. But that lower high at number 6 is never going to be higher than number 4, or it's going to break structures, for highs and lower lows. So this lower high is lower. This lower high is lower than that lower low, that lower high, and this lower high is lower than that. It's lower than that lower high, and this lower low is lower than that lower low, and this lower low is lower than that lower low. From 3, 5, and 7, and 2, 4, and 6. So the preceding the downward trend increase in likelihood and continuing from point 5 to 7. So you see how it increased at the end, and likely to continue increasing down in the downward trend from 7 to 5. Because this lower low, 7 was lower than 5. So that's how you know it was increased in that momentum in that direction, in the downward direction. So the first characteristic of a downtrend marks the point in the price action where supply exceeds demand. The number of available sellers and qualities and security that want to sell is more than the number of ready buyers and qualities that want to buy. Somehow, market participants have a majority no longer accepting the idea that the security should be priced as high as it is. The second characteristic indicates that increasing numbers of market participants that, though previously undecided, have become convincing during the recent peak of the price that they must no longer own or own as much as the security. The number of sellers increased simultaneously with the number of buyers decreasing. The third characteristic is usually accompanied by new information or new information from the news or new information that confirms the suspicion of those who determine to exit or no longer consider buying the security. Even more buyers back away, and even more sellers become eager to take profit or lose losses. So trading downtrends. The majority of traders seek to avoid downtrends because they are inherently focused on upward trends and trade long only. Downward trends can be found in every trading time frame, minute, day, week, month, or even years. Traders therefore look for ways to identify a downtrend as early as possible. Some traders prefer to trade both long and short so they can identify downtrends for new trading opportunities. So I think that you want to take this, you want to take it serious, take it for real. You should learn how to do both. So I'll teach you how to do both. I trade both, so you want to see that too. So traders recognize that once a downtrend has been established within their preference time frame, they should be very cautious about entering into a long position. If you see that a downtrend is in motion, don't enter in a long position. Especially you have to identify that the trend is going down. If it's going down, don't enter in for a long position just because it's making a lower high. It's going to go up, it's going to make a lower high. If that doesn't mean it's going in that direction. So the downtrend by contributing to a reduced demand. This accelerates the downtrend by contributing to a reduced demand. Long/short traders recognize the opposite, that this is now their opportunity to profit on the downtrend. Since the short sellers seek to profit from the downtrend by borrowing and then immediately selling shares with the agreement to repurchase them in the future. These are known as short positions or short sellings. If the asset price continues to decline, the traders profit from the differences between the immediate sale price and the lower future repurchase price. Since they add the price action by entering with sell orders, this too eliminates the downward trend. Such traders look to profit from at least the next swinger low, and maybe more if they can be patient, and then the trend actually does continue lower. So you actually have to be patient. If you're in a trend and you see it's going low, be patient, and because it's going to continue going lower. Oftentimes traders use technical indicators and chart patterns to identify These indicators, moving average, for example, can be used to identify the overall trend. If the price is lower than the moving average, as in the last video, then the stocks is likely to be going downward. Is the moving average vice versa in the uptrend? If the stocks or if the candlesticks are above the moving average on vice versa on the uptrend, then it's likely to be going uptrend. If the moving average though and the candlesticks are likely, the moving average is the line. My moving average color is red. So you see it's likely to be vice versa going on an uptrend. So for example, another case, I got a trade in. Okay, the moving average is above the red line, so it's going up. Above the red line, so it's going up. You see how this is for gold. You see how it's below, then it's going down. Well, all the way down to 731. It's going up now. Alright, see the red line is over. The candlesticks is above the red line, meaning it's going up. If you see the candlesticks below the red line, it's going down. So I don't really use too many technical indicators. So the chart patterns to identify and confirm is a downtrend. So moving average, for example, can be used to identify the overall trend. If the price is lower than if the price is lower than the moving average, then the line, in the red line, then it's likely to be considered a downtrend. Vice versa, if the price is higher than the moving average, then it's likely to be going up on an uptrend. So technical indicators, also the resistance, the RSI. The RSI. So you see the RSI right here. If it's going up, it's going to be going closer to 70 and 100. If you see it going down, it's going to be going closer to 30. So some people also use the line. I also use the line to a curve. You see a curve is going up. You see a curve going down, it's going down. You see a curve going up, it's going up. So the resistance line right here is just going to 70. It'll be going up. If it's going to 30, it'll be going down. So you use the relative strength index, which is that's what it is, the RSI, or they also use the average directionary index, ADX. There's all types of indicators you can use. There's 1,000 indicators you can use. Fibonacci, all types of indicators. Alright, I just use really the moving average and the RSI and the RSI. Sometimes I use Fibonacci. Sometimes I use trend lines. We use everything. The news, everything. So you can also show the magnitude of strength on the downtrend at given points in time. It can also show the magnitude and the strength of a downtrend at a given point in time, which can help when deciding whether or not to enter a short position. So we use these technical indicators, moving average, RSI, because it shows you, the momentum, the magnitude of the strength of the downtrend or the uptrend. So examples of a downtrend. The lengthy downtrend is, and this one right here is the stocks. Is for general electronics. The stock prices is instructed to review the price action of companies is growing awareness that the company troubles were deeper than originally anticipated, and that the layoffs and the spin-off and the plant closing and product cancellations were signaling a sea change in the economic environment. So one that GE was not prepared for. It wasn't prepared for it. So demand's weakened, and it was for selling. So you see, it made a double bottom right here. Boom, from this line to that line, made a double bottom. You're gonna see that a lot. And then it started going down. It made a doji right after this candlestick, after this Marabolo candlestick. It was actually making doji before that. dojis, meaning that it's indecisive in the market. So meaning that, and on the uptrend, meaning that buyers are becoming weakening. So the demand and buyers will be coming and weakening. You can see after it made a doji right here, boom. After it made that doji right here too, it made an even star right here at the top, like 1, 2, 3, 4 candles. It made this flat upward candle and a little box at the bottom to even star. Once it made that, it started going down. Boom, hold it got in. Once it made a low, it made another correction. It made another low. Made another lower high. It made another correction. Hold it got in about right there. And rolled it down. And all profit. So we do trade downtrends too. I want y'all to get familiar with that. I'm giving y'all all this. So I want you to just get familiar with that too, because we do trade downtrends too. In this chart, the stock market made the next drought moving lower than the previous drought is shown in the instant. Made a drought, boom, then the previous drought was lower than the previous one, and this one, and made another drought, and that drought was lower than the previous one. So this lower drought, as shown in the instant, this lower drought concedes with moments that supply the stock that investors want to sell. The investors want to sell had outnumbered demands investors that wanted to buy the stock at these prices. This initial sign of weakness, an example is the first characteristic from mentioned in previous. So we also had the news. We knew this from the news. So I also checked the news too, and was not accompanied by of the news company troubles through investors determined for themselves that the company's process were not as exponential as previous thought. The lower peaks and droughts that followed marked extended downtrends lasting more than 2 years, and during a time when the rest of the market was generally moving higher. The traders that had taken a bearish stance to stop following the breakdown from the first drought would have found many opportunities for a profitable trade. Ultimately, long traders may lock in their profit at the beginning of a downtrend and re-enter their long position after the stock shows the sign of a rebound, or a sign of a reversal, a trend reversal. So this is really just all that you need to know about downtrends. In the news too, also the news. Type in trading view. I also go to the news for ideas and stuff right here. Go to the news, tell you what's going on about different stocks, Bitcoin. This tradingview.com, free. You can also look at your charts on here. You want to look at like charts for like stocks or like forex. I trade forex really. I don't trade stocks. Trade stocks, but they do have the same charts that's on the MetaTrader 4 app that I showed y'all previous in the video. They do have a lot of people actually use. They have their computer set up and they use trading view charts to trade. I use MetaTrader 4 charts. I just rather look at the app and see what's going on in the app. But these accurate, and when at the end of the day, what's going on and stuff, you can look at these charts and see what's going on. They're real accurate. Bringing up this chart, so it's going to take a second. Boom. I'm gonna show you my pairs and stuff. Like I use TradingView for my ideas and stuff. I'm gonna look up ideas like gold, and you get ideas from other people, from trading view and stuff about the trades that's going on, like for the next day or right now. So there's so many things we all to y'all. You can just search and type in what you want, and it'll come up for that chart. This is Apple, apples right here. So it's very clear. You on your laptop or something, you on your phone, tablet. It's very clear. See what's going on in these charts too. So people use TradingView. TradingView good. I said get ideas from here too. Get ideas from TradingView. It's also good. We got a lot of ideas from here. TradingView ideas. Alright, but I just wanted to show that in here too. I come here every day anyhow to get my ideas. All from here, from TradingView. And I use my own technical indicators, also study the candlestick patterns, everything that I taught y'all. And you take this too, and you just whatever pair or whatever you're trading on, you just searching in here, right? Trading idea, typing trading idea right here. You just searching in here, typing gold, AXU, USD, boom. So yeah, here's the chart on here, and you just go to trading ideas, and you can see how recent they are. This was April 9th, April 10th, April 9th. You see how recent they are. 13 hours ago. Deeper look at gold. Gold could go. They're saying gold's gonna go up. Some people say gold's gonna go down. So you just gotta look. So people are actually showing you to show you how they do their trend lines. See, they drawing the trend lines and stuff, making lower highs and lower lows on a downtrend. And you just go off of your own. You take that, you take everything that I taught you, and you make your own decisions when it comes to trade. I'm gonna teach y'all the times to trade too, and in the next videos, and teach y'all some Fibonacci, how to look at Fibonacci, a few other things, and we're good to go. Let's get this money. Alright, so gang, it's your boy Nature, aka Gang.